Hey everyone, welcome back to Corporate Decoder, the place where we try to uncover the hidden truths behind company filings. And let's just say this filing has some interesting numbers hiding in plain sight. Today we are diving deep into a recent report from Vanguard Fenway funds, focusing on their shareholder report for the period ending the 30th of September 2025. Think of this as a yearly checkup for several investment funds, and like any good checkup, we want to see if everything is healthy and performing as expected. We'll be skipping the super technical legal stuff and getting straight to what really matters: the performance and the financial health of these funds. Stick around to see how these investments are doing, because understanding these numbers can really make a difference in your own financial journey. Also, if you appreciate breaking down complex financial documents into simple insights, make sure to subscribe and join our Discord community linked in the description below. We are building a fantastic community there. First off, let's talk about costs. Nobody likes paying more than they have to, right? This report breaks down the cost for a hypothetical $10,000 investment. For the Vanguard Equity Income Fund investor, shares your cost for the year was about $28. That is 0.26% of your investment. For the Admiral shares of the same fund, it was even less, $18. Or 0.17%. Now, the PrimeCap Core Fund investor shares had higher costs at $48, which is 0.44%. So, while these numbers might seem small, they add up over time, and it is good to know what you are paying for. Now, for the exciting part, the performance for the year ending the 30th of September 2025, all three funds underperformed their benchmarks. Ouch, the market was a bit of a roller coaster. Optimism about things like deregulation and artificial intelligence was offset by worries about rising interest rates and trade policies. Interestingly, big company stocks generally did better than smaller ones, and growth stocks really beat out value stocks. Looking at the equity income fund more closely, 5 out of its 11 industry sectors actually helped its performance. Strong stock picking in utilities and being a bit underweight in consumer discretionary stocks boosted things, but weak stock picking in healthcare and real estate, along with being underweight in information technology, really held it back. Moving on to the longer term performance, the report shows us how things look over the last decade. Remember, past performance is not a crystal ball for the future, but it gives us a good idea of a fund's history. Let's look at the Equity Income Fund investor shares. If you had invested $10,000 back in September 2015, by September 2025, your investment would have grown to $31,077. That is a pretty solid gain. The FTSE High Dividend Yield Index, a benchmark for this fund, would have grown to $28,985, and the Dow Jones Total Stock Market Float Adjusted Index would have grown to $36,233. So the Equity Income Fund did okay over the long haul, but it lagged behind the broader stock market index. In terms of average annual returns over the last year, the Equity Income Fund investor shares returned 12.25%. For the last 5 years, it averaged 14.73%, and for 10 years, it was 12.01%. The benchmark indexes generally performed better over this period. For instance, the Dow Jones Total Stock Market Float Adjusted Index returned a very strong 17.46% over the last year alone. Let's check some key statistics for the Equity Income Fund as of the 30th of September 2025. The total net assets were a massive $61,667 million. That is a huge amount of money. The fund held 201 different investments. The portfolio turnover rate, which means how often the fund buys and sells its holdings, was 51%, and the total investment advisory fees were quite substantial, $45,976,000. Looking at the portfolio composition, financials make up the largest slice at 20.9%, healthcare follows at 15.2%, and industrials and information technology are both around 11 to 12%. This shows a strong concentration in major sectors of the economy. Next, let's look at the Vanguard PrimeCap Core Fund. The investor shares of this fund had their own story. Over the last year, it also underperformed its benchmark. The market conditions were similar, large cap stocks did better, and growth stocks beat value stocks. However, this fund's performance was significantly impacted by an overweighting in healthcare, which declined. If you invested $10,000 in PrimeCap Core Fund investor shares 10 years ago, it would have grown to $37,550 by September 2025. The MSI US Prime Market 750 Index grew to $41,123, and the Dow Jones US Total Stock Market Float Adjusted Index grew to $39,210. So, The prime cap fund lagged behind both these benchmarks over the same 10-year period. For average annual returns, the prime cap core fund investor shares had 16.57% for the last year, a solid 15.83% over 5 years, and 14.15% over 10 years. Again, it was outpaced by its benchmarks, especially the Dow Jones US Total Stock Market Float Adjusted Index, which achieved 14.64% over 10 years. For the prime cap core fund, the net assets were $12,882 million. It held 176 positions and had a much lower portfolio turnover rate at just 11%. Total investment advisory fees were $37,933,000. The portfolio composition here is heavily weighted towards information technology at 25.6%, followed by healthcare at 21.1%. This indicates a significant focus on growth-oriented sectors. Now, let's quickly touch upon the auditors. PricewaterhouseCoopers LLP audited these financial statements. For the fiscal year ended September 2025, the audit fees were $55,000, down from $64,000 in 2024. All other fees like audit-related tax and other fees were zero for the registrant itself. Diving into the financial statements for the Vanguard Equity Income Fund, we see a detailed breakdown. The schedule of investments as of the 30th of September 2025 shows a vast array of holdings. For example, under Communication Services, they hold T-Mobile S Incorporated shares valued at $539 million and Comcast Corporation Class as shares valued at $225 million. In the energy sector, which makes up 8.3% of the fund, ConocoPhillips holdings are valued at over $1 billion. And EQT Corporation is valued at almost $800 million. The financial sector, the largest part of the fund at 20.9%, shows JPM Morgan Chase Incorporated with holdings valued at over $2 billion and Bank of America Corporation at over $1.7 billion. The statement of assets and liabilities as of the 30th of September 2025 shows total investments in securities at over $61 billion. Total assets were close to $62 billion, with total liabilities around $312 million. The statement of operations for the year ended the 30th of September 2025 shows investment income from dividends and interest bringing in over $1.5 billion. The net investment income after expenses was over $1.4 billion. The statement of changes in net assets shows a net increase from operations of over $6.9 billion for 2025, although total distributions were over $5.2 billion. The financial highlights for investor shares show a net asset value per S-share of $46.76 at the end of the period. The total return for the year was 12.25%. For Admiral shares, the net asset value per S-share was $97.99, and the total return was 12.36%. Finally, let's look at why the trustees decided to renew the advisory contracts. For the Equity Income Fund, they reviewed the nature and extent of services provided by Wellington Management Company, LLP, noting their long history since 1928 and a focus on fundamental research. They also considered investment performance, finding it satisfactory compared to benchmarks and peers. The cost and economies of scale were also deemed favourable. The trustees concluded that the totality of these factors supported renewing the advisory arrangement. For the PrimeCap Core Fund, a similar review was conducted for PrimeCap Management Company. The trustees highlighted PrimeCap's long-term approach to equity investing and their multi-counselor model. Performance was considered satisfactory, and the expense ratio was found to be below the peer group average. The fee structure also included breakpoints benefiting shareholders as assets grew. So what is the big picture here? Vanguard Fenway funds through these reports are showing steady operations even in a market that has presented some challenges. The Equity Income Fund and the PrimeCap Core Fund, while underperforming their benchmarks for the recent year, demonstrate long-term growth and have large diversified portfolios. The costs are generally well managed, especially for the Admiral shares, and the advisory arrangements have been thoroughly reviewed and renewed by the trustees, indicating continued confidence in the management teams. The key takeaway is that even with market ups and downs, these funds, particularly the larger ones like Equity Income, have a substantial base and continue to deliver returns. The PrimeCap Core Fund's heavy concentration in tech puts it in a position for high growth but also higher volatility. It is a classic trade-off between growth potential and risk. What do you think about these Vanguard funds? Are you invested in any of them? What are your thoughts on the performance and the sector concentrations? Let me know in the comments below if you found this breakdown helpful. Smash that like button and subscribe for more, and remember to check out our Discord community linked in the description for continued discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.